Hello and welcome back to the Direct Capital channel, and welcome to today's market update on Bitcoin, Ethereum and Litecoin. Lots has been going on recently since the last update on Wednesday. We spoke about this green area being a demand zone, and we spoke about the weakness that this demand zone was starting to show in the recent update, and we've seen this weakness manifest itself and translate into reality. We've seen a breakdown, but also we saw a breakdown from the monthly channel as well. So this range in particular, we've seen a breakdown from this range, unfortunately, and the range low of 7750 gave way pretty easily. But since then, we've been consolidating within this small micro ascending triangle from which we recently broke up. And what's interesting is that since Wednesday, the fear and greed index fell dramatically. And that's understandable because we saw a massive breakdown to the downside. So naturally speaking, there is going to be a lot of fear coming into the market. So since Wednesday, we saw a dramatic decrease in the fear and greed index towards extreme fear levels. But what I find very interesting is that since yesterday, we've seen a small increase from 20 to 24 on the fear and greed index. And this is quite interesting to me because this small increase has shown that there is a small amount of greed entering the market. Overall, there is still extreme fear in the market, don't get me wrong, but there is a small amount of greed entering the market at the moment, and this fear and greed index number of 24 was registered before the recent relief rally on Bitcoin. And that's what I find very interesting, that we were seeing some initial signs, at least on the fear and greed index, and of course on this channel, or at least this ascending triangle, which is a bullish structure. So we saw some small signs, some small hints beforehand. And I was actually going to tweet that the fear and greed index increased slightly, so there is a small amount of greed entering the market, so we might actually see some relief. I didn't manage to tweet that out in time, unfortunately, but that's a small observation that I wanted to share with you here on the channel before we get in and dive in to Bitcoin's update in a bit more detail. So in general, I feel that this might be some relief until the range low. So this range low recently broke down without any bounce whatsoever. So we saw a breakdown, a clean breakdown. I feel that we might see this range low flip into a resistance, and if it does, if we get that confirmed rejection from there, then that gives us an idea that we might not have seen the bottom yet on this retrace. But having said that, what I'm very interested in at the moment is the macro view on Bitcoin's price action. So since this breakdown to about 7,400, we've seen a minus 47% retrace in this correction since about the end of June, since 13,900. So we're seeing a minus 47% retrace. So here's the chart that we were talking about last week on the channel. This essentially shows us all the previous halvings. So this is halving 3, halving 2 and halving 1, and it shows to us the retraces that we see in the new bull market. So the first major retraces in the new bull markets, they are in orange right over here and over here, and of course we see the pre-halving retraces, which happen around 100 days before the halving itself. And what I spoke about in last week's video is that this retrace right over here and here prior to halving 1 and 2 is essentially the same thing happening right over here. But since then, since last week, we've seen a small development in the form of a breakdown in Bitcoin's price action. So this is now a minus 47% retrace. So as we're looking at this first major retrace in the new bull market prior to halving 1, so halving 1 is over here, and this is the first major retrace. If we measure it from candle body to candle body, that's going to be a minus 45% retrace. But if we measure this retrace from wick to wick right over here, this is the bottom of that wick, so it's a flash wick, it's an outlier wick. If we measure it from wick to wick, that means that retrace was minus 47%, which is very similar to what we're seeing at the moment. So I'd like to complement this particular observation with an observation I made in my private journal on the 7th of October. So here's an excerpt from my private journal. Here is what I wrote on the 7th of October, that we are seeing a minus 44% retrace at the time in Bitcoin's price action, much like we saw prior to Halving 1, where Bitcoin enjoyed a minus 45% retrace before resuming its bull trend. But if we want to be extra meticulous, BTC in fact managed a brief flash wick to register a minus 47 retrace. So this is essentially what we're talking about now. So though I tend to discount this in my analysis, it bears worth mentioning, even if just to gain an idea of what could potentially happen to Bitcoin in the near future. So should Bitcoin retrace minus 45% this time around, that would lead to a price of 7,620. And if it retraces minus 47% in the fashion of that brief flash wick, that would lead Bitcoin to a price of 7,343. And I just end this analysis by talking about the 7,400 level because it is confluent with the retrace prior to Halving 1, especially if we take into account that flash wick. And it's this flash wick that I'm talking about right over here. This is what led Bitcoin to retrace minus 47% prior to Halving 1. So if we're taking that outlier into account, then this is a minus 47% retrace. So zooming back out, we can see that there is a confluence still in the historical price action. Of course, if we're taking into account outliers, outlier wicks in particular, then this is still confluent with what we're seeing here. We're seeing a minus 47% retrace right over here and a minus 47% retrace right over here. But history might not repeat itself, and that's what I'm very open to. I'm very open to the fact that we might go lower because there's always a possibility. Of course, history doesn't repeat itself like for like. It doesn't happen that lightning strikes twice, that we're going to see a 47% retrace here and a 47% retrace here. But it is quite interesting just to see, even if just to glean, that we usually see a first major retrace in a new bull market in these orange boxes. So it doesn't matter if this is going to be minus 47% or minus 50%. Generally speaking, the tendency is that we see a first major rejection, or at least a first major correction in the new bull market in these orange boxes after the bull market has started to the upside. So we see that here and here as well. So I wouldn't necessarily look at this as a fractal, but rather a guide as to which market phase we are in at the moment. So it is quite interesting to see that recurring theme in Bitcoin's price action, that if we take into account the outlier wick in this retrace right over here, then we'll actually see the same amount of retracement in this current corrective period for Bitcoin. But moving on to Ethereum USD, in the previous update we spoke about how this macro channel bottom, the weekly macro channel of $160 to $360, this is essentially the weekly macro channel. So this is the weekly channel for Ethereum. We saw this movement from the bottom to the top to the bottom to the top of the channel in the past, and we got that once already right over here, but I'm just wondering if we're going to see that again. So I just want this bottom of the weekly macro channel just to hold, because if it does, then that possibility is still very much on the cards. And at the moment, if we just zoom into the daily time frame, then we are seeing a bounce from here. It is a positive sign because we saw a long downward wick right over here. We saw a long downward wick dip and dig deep into a pool of liquidity below 160. So this is where we see evident buy interest just waiting. They have those buy orders waiting there just to get filled, and we saw a approximately 20% rebound from this channel bottom before, 23% to be specific, and I'm just wondering whether we're actually going to see a weakening over here, because if we see a weakening, then that might be something to be bearish on, but for the time being it is a positive sign that we're seeing some rebounding from here. For the time being it is a 3% rebound, 4% so far. So far so good for Ethereum. This is the level I just want it to hold, and so far it looks like it's doing pretty well. These long downward wicks are usually a sign of reversal, so I do expect some continuation to occur for Ethereum in the short term. So as long as it's in this channel, it's respecting the bottom of this weekly channel, then that's all good for Ethereum in the midterm as well. But for the time being, we are going to see continuation on this bounce. Right over here, if we zoom into Ethereum BTC, I was talking about this particular level being a very important support for Ethereum, and I did expect some coiling initially, but in the previous update it did look like Ethereum BTC wanted to break down, but at the same time I also mentioned that you have to wait for that confirmation. We saw confirmation on the lower time frames. I'll just zoom in what I was talking about at that time. We saw confirmation candle closes below this blue level right over here on the lower time frames, on the 4-hour time frame to be exact, but we didn't get that candle close on the daily, which is why I didn't turn bearish prematurely on Ethereum BTC. I did expect some coiling initially right over here, so that's something I'm leaning to more at this time, because we are seeing that this is still a diagonal resistance. This is where the selling is still going on, and until we get a candle close above this black diagonal resistance, that's essentially where I'm gonna flip bias. So until we get that break of the black diagonal resistance, I am just going to stick with my original prediction of Ethereum BTC coiling in towards the apex of this triangle before it manages to break down. And right over here is Litecoin USD, and it is quite interesting because in the previous update I spoke about how Litecoin has to finally just steer clear of this blue dashed level. It didn't really know if it wanted to claim it as a support or as a resistance, but I did expect it to reject to the downside, and we finally saw that strong rejection. And these were the levels that I was going to be looking for. Of course, we didn't get 44.5 because the wick right over here was $47, but we did get this region right over here, $49 roughly speaking. This is where we're seeing this morning star candlestick formation printing a typical candlestick formation that just shows us reversal. So this is essentially where we might see Litecoin USD return, revisit it as a resistance. Of course, there is a lot of demand around this region right over here, so that's something that I'm going to be looking at in the short term on this recent reversal. So that's Litecoin USD for the time being. And moving on to Litecoin BTC, this is essentially the higher low that turned into a resistance, and I spoke about Litecoin BTC just delving deeper into this historically relevant demand zone. And while I did mention that we'll see downside, to be honest with you, I thought we'd see a little bit more downside, but it looks like this 4% wick to the downside was enough of that downside. So it does look like Litecoin BTC is reversing to the upside again, and this is essentially the point of rejection that I'll be looking for. I want to see if this high low is going to still figure as a resistance going forward. And that's essentially the point where I'll be flipping bias. So depending on what happens there, that's where I'm going to be flipping bias. So if Litecoin BTC is going to reject from this higher low resistance, then I'm going to be more bearish on it. But if it breaches it and manages to claim it as a support, then I'll be more bullish about it. But overall, it is in a historically relevant demand zone. This is the demand zone that I'm talking about. This is where we usually see Litecoin rally to the upside. And this is going to be more evident on the weekly chart as we zoom out. So let me just zoom out very quickly. Right over here, we tend to see a strong reversal from this blue area towards higher levels, and we've seen that over here and over here, but we're not quite seeing that volatile price action in this area. But historically speaking, it is an area to pay attention to, at least in my opinion. And that's just about it for today's market update, and if you've enjoyed this video, please consider leaving a like. It helps out a lot. And of course, keep in touch. If you'd like to subscribe to the channel, feel free to click the red button and subscribe for future videos just like this one. But of course, remember, this Halloween you can treat yourself to a $30 discount on all Rect Capital courses using the discount code Halloween. So you can get the technical analysis course for $30 off and the risk management course for $30 off. So you save $60 off in general overall. So that's a pretty good deal. The offer ends on the 1st of November. So if you're interested in any of the courses, check out the links in the description down below. Wishing you a pleasant, peaceful weekend in the company of significant others, family and friends. I'm Rect Capital, and I'll speak to you soon.